Hello, traders. Gary Wagner here. Just after 1 o'clock in Honolulu, 7 o'clock in New York on Monday, 13th day of September 2021, and this is the daily report for gold and silver. We had a fractional or modest move up in gold, lower in silver, and the big news is going to be tomorrow's inflationary report. The CPI will be coming out. They are predicting that it should be steady to up a little bit, but the Federal Reserve has really focused on the fact that it is their dual mandate of full labor and full employment versus inflation, letting inflation run hot. So even if the numbers do come in hot, I think their major decision when the FOMC meeting convenes on the 21st will be about labor and jobs. We'll talk about that, but first, our report will cover really critical levels of support and resistance in both gold and silver. Both the Federal Reserve as well as market participants are going to keenly focus upon the economic report of inflationary pressures for the month of August, which will be released tomorrow. Currently, we have gold futures basis the most active December contract, up $3, 0.17%, and currently fixed at $1,795.10. Now, while gold flirted with $1,800, the high being $1,800.20, it was unable to sustain a price move at or above $1,800 and settled near the mid-range of today, with the low being $17.8440. Dollar itself had mild strength, and that provided mild headwinds. The dollar gained 0.07% and is currently fixed at 96.64. Although gold is back to where we entered our most recent position, there is absolute certainty that it has been struggling in terms of a price point to move beyond substantial resistance at $1,800 per ounce. That is a key psychological number. It also corresponds to the 23.6% Fibonacci retracement at $1,799.50. And then there is the 50-day moving average that comes in at $1,798.80. Together, those three technical indicators are all contributing to technical resistance at that price point. The other thing that's noteworthy is that we saw gold touch upon and just go over 1,800, but unlike last week where we saw it actually move quite a bit above it, although closing below it, today it traded to a lower low and a lower high, and it closed slightly higher when compared to Friday's close. However, it did so in a very tepid manner. It seems as though traders are positioning themselves for tomorrow's inflationary report. In terms of our absolute levels of support and resistance, we'll first cover resistance, which we briefly touched upon, beginning at $1,800, of course, $1,798.80, the 50-day moving average. That would be the current level of resistance. The next two levels of resistance occur at the 200-day moving average, which is currently fixed at $1,809, and the 100-day moving average, which is currently fixed at $1,815.50. In terms of support, we first want to look at the series of lows that have come in right at around 1785, with major support for gold at the 38.2% fib retracement, which occurs at $1,776.30. Maintain your current long position, maintain your current stop. Silver, on the other hand, did close lower on the day, although it traded well off of its lows as it traded to a low of $23.36. You can see that low expressed with this long-legged doji candle. It did close 14 cents lower when compared to Friday's close, with the December contract currently fixed at $23.76. Silver continues to have exaggerated or more bearish pressure than gold does. We can see that today's activity, a drop of about 14 cents, is not really what concerned me the most. It was the intraday low that came in at approximately 23.35. While it did recover and recovered over what I consider to be a critical level, which is the 78% Fibonacci level at $23.73, it still remains rather weak, having come down from these recent highs at the 50-day moving average fixed above 24.69, which is the current reading of the 50-day moving average in silver. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.